Hello again, everybody, and welcome back to the channel. And if you guys are new here, this channel is all about cash flow and how to increase the rate of cash flow against your portfolio through things like dividend investing, through things like options and cash secured puts, covered calls, and all that kind of great stuff. But today I did want to make another video about the JP Morgan Equity Premium Income ETF. And I got some comments in the last video basically saying, haha, yeah, like $1 million. Because the video I made last time was kind of going over how much could you make with passive income if you had $1 million, right? But I definitely understand, not everybody, or I should say, probably 99% of people don't have $1 million laying around. That was just more of an illustration as to what's possible, if you get into retirement someday and you do have, let's say, a substantial nest egg. I mean, there are a lot of retirees out there who have, 500,000, $1 million, $2 million, maybe even more. And so it just gives you an idea of what you can expect in terms of passive income. So in this video, I kind of wanted to go over this ETF again and also go over how much passive income you can make from a $100,000 investment this time instead of $1 million, and exactly how much you would be looking at, and go over the numbers with you and everything. So the first thing is, though, let's go ahead and go over to, this is on etfdatabase.com. I'll put that link in the description if you're interested. So right here, let's just read through this paragraph. This way you can get kind of a better idea of what this ETF is all about. This is, once again, the JP Morgan Equity Premium Income ETF. And this paragraph here, the analysts report, JP Morgan Equity Premium Income ETF, or JEPI, is an actively managed fund that generates income by selling options on U.S. large cap stocks. The fund invests in S&P 500 stocks that exhibit low volatility and value characteristics, and also sells options on those stocks to generate additional income. JEPI was launched in May of 2020, so there is limited performance data available. The written call options should provide the fund with additional income, but may mean that JEPI will miss out on the full gains from the increases in the underlying portfolio. Ultimately, any actively managed fund is a bet on the manager's ability to outperform the market. JEPI offers a hedge fund-like strategy in an ETF wrapper, and investors and advisors should consider whether JEPI is suitable for their objectives. It is quite reasonably priced for what it offers. And speaking of the pricing, here's the expense ratio, 0.35%. So really not a huge, crazy expense ratio like you have, for example, a lot of hedge funds. This is kind of comparing it to a hedge fund, depending on how you look at it, right? But hedge funds charge a lot more in fees. Mutual funds do as well. And ETFs are definitely probably the most cost-effective way if you're looking to get exposure to something like this. I mean, instead of, investing in a hedge fund or, like I said, a lot of mutual funds too, they are just very, high fees compared to ETFs, which tend to be lower in the amount of fees you pay. But essentially, this ETF does invest in a diversified portfolio of equities. As you'll see here, and I kind of mentioned in the last video, about 20% basically being invested into exchange-traded notes. The other 80% is invested into equities. But the strategy they're using for the passive income is through options. And so you're looking at generating passive income from these options with this ETF. And so that is going to limit the upside with something like this. And so if you look at the share price history, like they were saying, there's not a huge amount of history. It only goes back to 2020 when this fund was launched, but nonetheless, has it held up better than the overall market? We could run the numbers on that. I believe it has, right? When you're looking at, the percent down, you could even type it in, just go to Google and compare the S&P 500, the NASDAQ versus JEPI, right, over the same time frame. And you can see how over the last year, for example, it's down 7%, down 8% over the, year to date. And just keep in mind, I mentioned this in the last video, but you're not going to be really getting capital appreciation. That's not the goal of this, right? So even though it started off at $50, kind of rid up that bull market, in late 2020, 2021, it only hit a peak of $62 a share. Meanwhile, the NASDAQ, S&P 500, definitely the NASDAQ especially, outperformed. So it really comes down to what your goals are. I mean, a lot of people who invest in a fund like this, they're looking for passive income. They're not looking for capital appreciation, because it just really comes down to do you want to focus more on income? Are you a retiree, or do you want to get growth and income, or do you just want growth, right? So you just have to kind of look at it from that perspective. But nonetheless, you look at the passive income. This is a monthly dividend payer, and so you're going to get those passive distributions into your portfolio. So we could kind of run the numbers here and go over, let's say, $100,000 investment. And we just have to take the current price, which is $57.79, and we can divide that up. And we get 1,730 shares. And then you take this most recent dividend amount right here, 0.495, multiply that. And as you can see, you get $856 from the most recent dividend. Now, as you'll see here, the dividends are variable. And so you can't just depend on a fixed amount of dividends coming in every single month, but you could even run the numbers on a higher amount of dividends. Like you'll get July's dividend, for example. Let's take 40.95, divide it back. You get 1,730 shares, so that's $100,000 invested in this ETF. So the month before that, if you had that many shares, you would have received about $1,074. And so it just goes to show you, like, some months are going to be a little bit less, some months are going to be a little bit more. You can even go back to 2020 and 2021. They were paying less in distributions in general. And it really comes down, I think, a lot to the market environment and how much passive income they're able to generate from the strategy, because volatility will play a huge role in that. But like 2020, right, they were paying about 30 cents, 20 cents. Now, 40 cents, 50 cents. So more recently, they've been paying higher dividends. And so, like I said, you're not going to have $1,000 for every 100,000 every single month, right? But nonetheless, it kind of gives you an idea. Maybe some months you make $700, maybe other months you make $1,200 a month. Maybe some months you make $900 or $500. It just really depends on what they end up paying out. And there's no way to determine that until the dividend is actually declared. But nonetheless, I really like this ETF. I'm going to make more videos on ETFs just like JEPI. I know there's been a couple of you in the comments, like SCHD, the Schwab Dividend ETF. You guys mentioned that one, I saw. And there's a couple other ones. I think you mentioned JEPQ. I could perhaps make like a review video, JEPI versus JEPQ, and kind of go over that perhaps. So if you want to see more content just like this, hit that subscribe button. I really appreciate everybody who has subscribed so far. This is a new channel, and I just want to create content like this on a regular basis where I talk about some of these ETFs and what you can kind of expect, and also individual stocks and just generating cash flow so that you can get passive income, because ultimately, isn't that the goal for a lot of people, right? To retire and live off perhaps the dividends or the passive income that your portfolio generates. So nonetheless, guys, let me know what you think in the comments down below. I'd love to hear your thoughts. And until next time, I will see you guys in the next video. And thanks so much for watching. Take care.